Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth. The Investing Iguana is ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 768,000 reads and 53,000 likes. I've produced over 650 videos with more than 300,000 watch hours as of December 2024. I also focus on regional and world economy topics. Today's story is wild, and it's shaking up the entire tech world. You know how everyone's been talking about AI and NVIDIA being the golden child of tech stocks? Well, something just happened that's making investors nervous, and I mean really nervous. Let me break this down in a way that makes sense, even if you're new to tech investing. Imagine waking up to find your favorite tech stock down 14%. That's exactly what happened with NVIDIA in pre-market trading. It's like showing up to your favorite coffee shop and finding the price suddenly jumped from $5 to $7. You'd be wondering what's going on, right? But this isn't just about NVIDIA. European chip companies like ASML and ASM International are also taking big hits, dropping 10% and 14% respectively. Here's where it gets interesting. A Chinese company called DeepSeek just did something that's got everyone talking. Think about it like this. If building an AI model was like building a house, the big tech companies have been telling us we need millions of dollars and years of time. But DeepSeek just showed up and built a comparable house in 2 months for just $6 million. Now you might be thinking, Iggy, why should I care about some Chinese AI company? Well, if you've invested in any tech stocks, especially through your SRS or investment accounts, this matters. The big question everyone's asking is, have companies like Microsoft, Google, and Meta been spending too much on AI development? Let's talk about GPUs, the brain behind AI development. If AI was a car, GPUs would be the engine. NVIDIA has been the Ferrari of GPU makers, and companies like Amazon and Microsoft have been their best customers. But DeepSeek is suggesting we might not need a Ferrari to win the race. Maybe a Toyota can do the job just as well. This news is hitting the Singapore market too. Many of our local investors who jumped into tech stocks through popular ETFs or direct US stock investments are feeling the impact. But remember how we panicked when ChatGPT first launched, thinking it would replace everyone's jobs? Well, we learned that new technology often creates opportunities rather than just threats. The smart money folks at Raymond James make an interesting point. This situation might actually push US tech companies to innovate faster. It's like how when Malaysia announces a new tech hub, Singapore steps up its game to stay competitive. Competition breeds innovation. Some analysts at Bernstein are skeptical about DeepSeek's claims. They say it's like when someone tells you they built a HDB flat for half the usual cost. There are probably some hidden expenses we're not seeing. They believe the $6 million figure doesn't include research costs and previous experiments. So what does this mean for your investment strategy? First, don't panic. Market overreactions often create buying opportunities. Remember when tech stocks crashed during COVID-19? Those who kept calm and stayed invested saw their portfolios recover and grow. The AI race isn't just about who can build the cheapest model. It's about who can create the most useful applications. Think about it like our local food scene. It's not just about who can make the cheapest chicken rice, but who can consistently deliver quality that keeps customers coming back. This market reaction might actually be healthy. It's forcing companies to justify their massive AI investments and pushing them to be more efficient. For investors, it's a reminder that even in hot sectors like AI, fundamentals matter. If you're worried about your tech investments, remember this. Innovation cycles always have ups and downs. The key is to stay diversified and invest in companies with strong fundamentals and real competitive advantages. Before you go, I've got a video coming up next week about how to build a recession-proof tech portfolio. Make sure you're subscribed so you don't miss it. And hey, drop a comment below. I'd love to hear your thoughts on this AI development. Are you buying the dip or staying cautious? Until next time, this is Iggy from the Investing Iguana, helping you navigate the wild world of investing. Stay smart, stay invested. Until next time, this is Iggy from the Investing